The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Thursday morning in the States, Thursday night here in Asia. And I think we've got Eric on with us first thing. Eric, are you there?
I am here. Good morning, John. Good
Great.
evening.
Good to hear from you, my friend.
All right. You too.
How's New York treating you today?
New York is going to be like 90s for the first time in about a year today. It's going to be very hot and humid, so we're getting into what is a typical summer here in New York, so that's good. So it'll heat the streets up a little bit. They're not that they need any heating up here. They're crazy as always. But I'm up here, I'm looking over the Bronx Zoo right now. I might as well be in the Bronx Zoo, I guess. But it's the most interesting area. I know Brooklyn, Bronx, Staten Island, Queens, Manhattan, of course. But the Bronx is very interesting. A lot of stuff going on up here. One of my buddies is a guy named Dion from Dion on the Belmonts. He used to live right up the street here. And I don't know if you ever heard Run Around Sue or Abraham Martin and John, all those songs that he did. He was one of the original doo-wop guys here in New York. And there's a whole section called Arthur Avenue, very Italian, all Italian stores. So I kind of like it. It's New York,
Well, I tell you what, it's good to have you on this morning. I was telling you earlier, and the show actually couldn't do the show last night here. Just want to apologize to everybody. We're in a new facility that I hope you're going to be visiting. We're the only tenant in. We jumped the gun a little bit and got into a facility called the Cyber Center. It's like just a massive undertaking this town has kind of gone into here with this thing. And just the name alone, Cyber Center, I can send you guys pictures if you'd like to see them. But there's a lot of construction here. They didn't exactly have the telco under control, I guess, for the first folks jumping the gun a little early like we did. We were sitting on a launching pad trying to get in here for the last year. And, they're just working things out. And I got to apologize to everybody out there. We went to another site last night to try to do it. It didn't work out. But when you come over, Eric, I think you're going to be impressed with this place. You're not going to believe you're in a mid-tier city in the Philippines of all places when you come over here and visit this place. It's just a cool spot, but we'll eventually get it worked out.
I'd love to.
Looking forward to you coming.
Yeah, great.
I tell you what, we've been doing some talking over the past 24, 48 hours about a few things. What did you want to kind of start, or you?
Yeah, sure. Why don't we kick off some ideas?
Yeah, let's hit the S&Ps first. Let me just kind of run through that one, and that's it. Then I want to get right into kind of what we're talking about here, because it might lend some credence on some topics that we're going to get into here that I think the listeners are going to enjoy. Here's the situation in the S&Ps. We got down into the tick, the 2068.75. It's unfortunate we had some automated systems that were going to take some profits on the downside. 2068.25 is just heartbreaking when you miss a target, and the market does what it did yesterday, just jumps to the moon. And the real weird thing is, for me, Eric, and I'm going to go to our scanner here really quick and show this. Here's the S&Ps. Here's the daily situation. We're still negative on the daily and the weekly. So I'm taking that, and we talked about not trying to buy the bounce at 2068, that general area, because, most of the components are not really breadth positive, and, we talked about that a lot. I'll watch some prior shows if you want to get a dissertation on what that means. But, most of there's a disconnect in the internals of the index itself and what the index is actually doing. And that violent move yesterday still didn't drag a lot of things up above and into and above the daily profiles or weekly profiles on a large scale. So, I'm still taking this as, and we had a new box appear today, new profile appear today. That's relatively non-directional. We're right in the middle of that thing. We're still edging up. But I'm not looking at this as like a turnaround, and I think we're at best going to be in a little bit of range here still. And, I just don't feel like the U.S. stock market is still the place to put investment capital into long equities. So that being said, let's get into what we're going to talk about.
Okay.
And if you have any comments on that, I'd love to hear them about the S&Ps in general.
I think you're right on in terms of seeing an opportunity earlier than most in terms of the breadth and the way that your work is developed here to give you an early read. You can see opportunities, and you can also see problems. And this is a case where I think you see some problems. June historically is a kind of a negative month, but we are due for some sort of correction, and I believe that you're right on. You called one about a year ago in September, in October, and we got back in, but you picked off about a 7 or 8% correction. So I think we're looking at another opportunity here to stand back or short and be careful, but the market is still, from my opinion, going to be on the uptrend. I don't believe this is going to be more than a correction. And corrections, go 5, 6, 7, 8%. So that could be significant from the trading point of view.
Yeah, I'm listening to what you're saying. I'm a little bit more partial towards the technicals and the fundamentals, as you know, and you're providing a great fundamental landscape every time I speak to you. To me, and I listen to it at face value, everything you say. Obviously there's some other markets that have been a little more attractive, mainly Asia, but and Shanghai in particular. But I'm just not seeing. And I'm not getting any confirmations on the technical side on the internals of what really drives these indices. And Steve Rhodes had said a while back that we are going to be moving, and I kind of have commended him on that statement quite a few times. We are moving into a stock pickers market finally, and I think this is kind of I think it's hitting home right now. I just if you kind of step back and look at it, and go back to the beginning of the year, what's happened here since January in the S&Ps. I mean, we really haven't really been anywhere. And I'm going back on our chart right now, and we were in danger, and I still think we're in danger. We were in danger of having some technical damage, finally having a kind of a pre-warning signal by the weeklies turning over. They're still negative, barely, and that was the first sign we had a day or two ago. In the weeklies turning negative on our breadth situation since first time that's happened since October 24th. And what happened yesterday was just, it really blew my mind. And that's what stops are for, and thank God we have them. Let's get into a couple of things we were chatting about, and maybe some of the folks can glean some information and some trading information off of that. So where are we headed first?
I'd like to talk just for a second. Asia was, we milked that cow pretty well, okay, Asia. And, what's next on the horizon? And I kind of, mull in my mind what could be another area to start looking at that has been overlooked. And the area that we know Euro, we know Europe, we know the stocks here, of course, but Latin America is, for some reason, I have an interest in Latin America lately that I have not had in years. You're talking about almost a $700 billion economy down there. We're not talking small little country like cigar manufacturer in Nicaragua. We're talking Chile. We're talking Bolivia. We're talking Colombia. We're talking all about 26 countries altogether, with about $1 trillion GDP altogether. So it's an attractive area for us to be looking at. Now, what is the trigger here? The trigger, the black swan or the white swan, whatever you want to call it, is this whole thing with Castro. Now, we've lived through Castro you know, many of us, and I know the situation with Castro firsthand, and I know the Cuban Missile Crisis that, you know, Khrushchev organized to make sure the United States did not invade Cuba again, and he got his way. Plus the fact he got the missiles removed that were aiming at his Dasha over there on the Black Sea from Turkey. So, you know, John F. Kennedy did a great job in a very diplomatic way, but Khrushchev, I think, won that battle because he wanted two things. He wanted us to leave Cuba alone and never go back and trying to take it over again, and we didn't. Now, Castro's had the longest dictatorship in Latin America, the longest lasting regime on earth in modern statistics, okay? He has dominated all of the civil liberties. There's nothing free down there. It's, you know, I mean, the papers, the TV, all the press is controlled by himself, Castro and his brother. It's interesting that Castro's a Jesuit-trained religious. He's not religious because he's communist, so he has given all that up. But he was Jesuit trained. And with Pope Francis being a Jesuit, there's a connection there that people didn't realize, and I think that goes way back. And I think that Pope Francis was very instrumental in getting, getting Obama to take a look at this whole scenario.
Yeah,
so
it
the
did kind
trigger
of come together, didn't it? It was wild how that came together. But,
yeah,
go ahead.
It was wild how it came together.
A lot of people don't remember. I mean, you were talking about Kennedy, and I wasn't around when Kennedy was president. He was only president, I think it was less than 3 years. It was either 3 years or less than 3 years.
Yeah.
He had, in this world of communication that's immediate, I mean, unfortunately, presidents have to make super quick decisions now because the world knows about it in 5 seconds, whatever happens. There's, like what's the white-haired guy on CNN that I really hate?
The white-haired guy on CNN.
No. He's a young kid, kind of. He's Vanderbilt's son, or his name escapes me right now. But he gets on there and starts slamming seemingly anybody with any sense, really. And
Anderson, I think.
Anderson Cooper.
Anderson Cooper.
They need to, they need to rethink that whole thing. And Ted Turner, I don't know how he let this thing spin to where it did, but. It was originally a news network, an objectively, formatted type situation. And now it's literally so far left now. I can't take it as real news anymore, but that's my opinion. But, when Kennedy was forced to deal with that, he had 12 days by himself with the crew before. I tell you what, I hear the music, Eric, let's come back after the break.
Yeah.
We'll finish up about that, and we'll get into Latin America a little bit deeper.
Good.
Hang on, guys. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity quality sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We've got Eric Courtney with us out of New York. And Eric, we were just finishing up. I was just saying at the end there that a lot of people don't really know. You know, Kennedy had about 12 or 13 days in conference with his peeps, if you will, to figure out what to do with that Cuban Missile Crisis while the rest of the world was kind of not really in the know. And it's just unfortunate. Yeah, it's a little handicapped situation for presidents and governments these days. They have to make such immediate decisions because the whole world seemingly is informed as much as anybody a lot of times. You know, as world crisis type events are happening real time. So just wanted to finish that, Eric. Sorry.
No, that's good.
Went along too long.
I think we're kind of doing a little, this is, you should be doing some real get down on some of these stocks and some of the ETFs, particularly in Latin America. But first, I just wanted to comment that, they've been talking back and forth with Cuba for years. And you had, of course, the Venezuela situation, which took precedence. I mean, Venezuela still supplies Cuba with the oil. Do you know how Cuba pays for it? They have their workers in Venezuela work for free. I mean, this is we're talking not third world, we're talking fifth world here situation, right off 90 miles away. Can you imagine what's going to happen with banking, with hotels, with the infrastructure needs there, with agriculture? There's going to be a boom for us here. There's going to be a lot of people that have been waiting for this. I like Cuban cigars, so I've been waiting. But beside that, I think that, we have an opportunity in Latin America to review it and start looking at certain opportunities down there that we have been overlooking. Latin America has been overlooked by the markets. I remember years ago there used to be Latin American specialists on Wall Street. There was a Latin American department of research in every firm, and we would cover all the Caribbean and the Middle America and the South America. Panama, of course, has become a big story in terms of opportunities for people. But Cuba is the one that's triggering the investment flows that are going to begin down there. And I think there's going to be a big commitment to going into Cuba and by a part of U.S. corporations, but also a big commitment in the part of investors looking around Latin America and see what's the next area. I talked with Juan, Colombia. Yeah. I mean, he's watching the ETFs all the time, and he agrees. He said there's some really interesting opportunities. So what I like about it from a trading point of view, it gives a trader another area to start to take a look at, throw a few ETFs up on a screen, keep an eye on the ball down there, see what's going to be happening. It's going to be in the news. It's going to be more and more in the news. We've removed them from the list of terrorist nations, so we're pretty much opening the door. The next thing you're going to see Marriott going in there building a monster resort. I mean, that's what's going to be happening. And I think it's positive for the North America and South American continents, and I think it's positive for investors. EWZ iShares Brazil, okay, down 9% this year. EWW Mexico iShares down 4%. Wasn't long ago Mexico was the boom again. Mexico with the new port on the east and west coast and all the automobile manufacturers going down there, etc. But ECH Chile down only 0.5%. The only one that's up in Latin America that I could find was Argentina. ARGT is up about 14%.
I think that's to some degree currency related, but I'm listening to every word you're saying.
A lot of these are.
I'd like to comment on some of the things you said earlier. We got about a minute before we go to the next break, but it's interesting. You know how hedge funds, they just kind of chase something, push it. All of them are jumping on board. Prices get exaggerated.
Right.
Do you know what I mean? Okay. So in that same concept, you watch what happened, like Vietnam. Okay, they go into Ho Chi Minh City, they build up everything gets expensive, and then they leave. All right, and the investment kind of dries up. Some people get left, the rug gets pulled out from them investor-wise. They go into the Bangkoks of the world. Obviously China, boom. That's just a little bit different situation because it's a macro level there. But Panama, just like you said before, they go in, they slam the money in. Mm-hmm. The investment is the Wild Wild West for a while, and that's what people and investors look for these days. I want to talk about that a little bit further when we come back from break, if you can hang around there.
Sure, John.
Okay, cool.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Eric Courtney in New York City with us today. Eric, what I was going to finish saying, and then we can move on, is, it's really spot on what you said. I mean, some of these opportunities, they just catch on fire so quick. And, you watch it in Vietnam, you watch it in Thailand, Panama. Just, I don't know, you spoke of Panama. That place, when you come in on the causeway from the airport there, coming into that city, you think you're coming into Hong Kong now. It's insane what they've done. It's incredible. And, if you've never been down there, it's actually a really quick trip from Miami, cheap. Just go kind of walk around. I mean, it's not cheap. It's not cheap to physically be there. The flight's cheap. But you know what the next thing, well, for a while, and the guys at Bloomberg were really pushing this. They put a Bloomberg office in Ulaanbaatar in Mongolia because that is the next, or has been the next for a little while. A couple of years. It's still kind of, the pickings are good there, I believe. But the whole country is a mining opportunity, and there's just bank after bank after bank popping up in the capital of Mongolia, of all places. And
wow,
there's so much money there. They don't even. There's people with billions of dollars there, trying to manage mining profits that have zero concept of what they're doing. And Bloomberg put an office there. I mean, it's just nuts what goes on. So when you say that some of these things might catch on fire in South America, I actually fully believe you, because I think it's Philippines is actually a really interesting place. I mean, the stock market's gone through the roof, but there's a ton of they're changing some laws here next year to where foreigners can own things. I mean, I don't know how good that's going to be in the long run for folks around here, but before you can't own land, you can't do this. They're kind of changing a lot of that, so that they're wanting the investment capital to come in on a whole new level. So keep your eye on some of these spots if you're out there looking for kind of outside the envelope normal or abnormal things to do, rather than just go buy GE and wait for the dividend payment. So Colombia, I mean, Juan, you were talking about Juan. Colombia was
everything's
a
for
race
sale down there. Yeah.
And what's happened is inflation had gone out of control there. I mean, like the normal person there was not able to really afford to do anything, and it's causing some social unrest. Juan was actually concerned it had gotten so out of whack for a while in Colombia that there was going to be a socialist type reform that was going to start happening, because I mean, the population mass is they kind of ultimately control what's going to happen, and when the crowd gets a little uneasy, that's when the political scene changes a little bit. So
capitalism still works, though. If people study it a little bit, they'll still see the average person is better off in capitalism than socialism, and we've seen this happen. Look at, again, we go back to Cuba. Cuba, I mean, obviously, there's going to be big things happening down there. It's going to trigger GXG. Keep an eye on, and the Colombia, ETFs. A lot of the ETFs in South America, I've been rummaging around trying to find, what's an Apple computer of South America? Well, you're not going to find one. You're going to find a lot of banks. You're going to find macro banks. You're going to find a lot of oils-related companies. You're going to find construction, mining. You're going to find some basic stuff that will make you a lot of money. I mean, if Brazil is down 20%, year to date, Colombia is down 18%. Again, the only one that's up was Argentina. Peru is down 8-9%. And we overlook all these. At least I have sensed that we overlook a lot of this region. And I think as you see Asia tiring a little bit, you see our stock market a little bit lofty, if you will, okay? Where would money start to flow if I was a hedge fund? I would be looking around to see if I could start diversifying globally a little bit, and Latin America is right on top of the list because their markets are down, our market is way up. It would be a logical, defensible move on part of a money manager, hedge fund, pension, what have you, to justify a year from now as to why he started to pick away at this area. And we can do it through ETFs, so we can do it through other, some companies. I think Juan is going to come on the show and have some specific companies someday, maybe next week, John, which would be good.
Yeah, I know you guys are planning on that. We've actually got Cold Cap Colombia on one of our breadth heat map cells.
Oh, and, you do? Good.
If you guys want to just take a spin at the demo of this thing, I'm pretty sure, I've been saying this for about a month, I think Tommy and some guys on our side have got everything ready to go, and I think Monday we're actually going to be able to launch this on TFNN. But you can go into the Bovespa here, just kind of generally follow some of the stocks that are in the Bovespa. We've got them all labeled here. You can look at them relative to our profiles. You can kind of do a little research on them, try to do some filtering, pick out the best of the best or the worst of the worst, and look at it relative to the index. We always, as you know, Eric, we always talk about relative strength trading, relative strength of the stocks relative to the index or relative weakness, and that's a time-tested way to find stocks that are showing their hand early relative to how they're acting versus the crowd itself. Right. And it's just something I've always been able to lean on. I tell you what, let's take a look at the Japanese yen really quick, Eric, if you don't mind.
No.
This has had a little volatility this week. And we've come off some all-time highs. I've been talking on this show, 124.61 might be a chance to pick a battle there. Got to kind of sit on the sidelines and maybe try to take another stance around 123.29. Excuse me. We fell through there. Now we're back above. So we're back in the balanced area. And Japan is some folks I've been talking to is that, maybe there were some blips on the screen about some strength in the Japanese economy, but I think, and I'd love your comment on it after I say this, but I'm still thinking, the yen is destined to be devalued even more, and I really don't know, how of all, the Asian countries. I mean, this is the one that really needs to kind of get its act back together as far as, how do they compete? How do they compete with some of the other things going on in the other currencies that are being controlled in Asia? So, what are your thoughts about the yen and Japan, if you have any?
Well, I think you've been right on with regard to making money for people on the yen. Certainly, we've been able to catch that move. And I think the Japanese, I go back to the history of this country was basically run by housewives. The housewives were the market in Japan. The stock market in Japan was all housewife trading. Nomura had, 5,000 salesmen just covering the territory there, getting everybody in the trade. And that's when the markets took off. Then the next thing you know, Japan is buying Rockefeller Center, and they had their day in the sun. So they've got to work to get it back again, as you just said, John. I think that you're right on there. And there's a lot of opportunities there, too. Anything that comes down, you got to start looking for opportunities in terms of the overall economic positioning in the world. It's a global world. I think, China is a little bit suspect here. India is rolling right along. Nobody pays much attention to India. It's another area we're going to talk about. And some companies over there that are very attractive. India's plodding along 8-9%. I mean, it's the most crazy country in the history of all mankind. India, 200 religions, 300 political parties. I mean, you name it. So.
Yeah, the Sensex and the Nifty 50 have there's something to keep your eye on, because when they catch fire, it's just like some of these, the Shanghais and the Hang Sengs of the world. They don't stop seemingly when they get going in one direction sometimes, and it's you can catch a nice wave a lot of times. But I'm listening to what you're saying about the Shanghai. I actually feel the same way. I mean, technically speaking, we have been buy the dip, buy the breakout, please buy the breakout when it comes to the Shanghai. And I'm showing a daily chart of the Shanghai right now, and this has just been really dizzying how this thing has taken off. And we've actually doubled. Yeah, we've actually more than doubled here in the last, I don't know, let's just call it 7-8 months. Has it done? Actually, yeah, 7-8 months we've doubled. 6.5 trillion in index valuation has happened in that time frame. And when you look at this, until you start seeing some cracks in the armor on the breadth situation, and I'm going to pull this back up here, I'm going to go right into the Shanghai, and you see it's like just shining bright constantly on every time frame. The internals, all the stocks are cooperating, just tons of green, as beating the table, pounding the table about buy the dip. The breadth's positive. No reasons to really start looking at this as a short, but you've got some overvaluation happening now in a pretty large way. So as soon as we start seeing some cracks in the armor on the breadth side, in my opinion, because I trust that indicator so much, then we can start looking at some new profiles that we may be able to look at some technical damage on the index itself, and then it will be time to start stepping in and nibbling, at least on the short side. But right now, you just, you're playing with fire, and that's how, we always, in Chicago, we try to get people to, especially new traders that were trading our capital in a prop environment. We're like, look, you don't want to get taken out in a body bag. You want to hang in there. You want to try to play the game right. Losing small losses is a part of this game. And when you start taking big stances on something like the Shanghai in the opposite direction, it can go up to 10,000. You've got to take that attitude. Euphoria, the tulip thing, Amsterdam. All the stories, Eric. And all the things that create. You've been your background and some of the things that you've said in the past. You started in the early '60s, right?
Yeah, 64 actually. Yeah.
Okay. That was like when the Beatles landed. I mean, you've been doing this a long time. You've seen everything, and you know that things can get out of control, just like the NASDAQ and the late 1990s and 2000. I mean, that was just crazy. I mean, you'd have Yahoo go up 100 points in one day after day sometimes. I mean, it was crazy. It was just euphoria. So until that calms down and until you get some technical reasons to start looking at this a little bit differently, technically speaking, you just, traders have to keep turning the wrench the same way until it's just, broken, and then you can start looking at it differently. But right now, I mean, it's still not a short in my opinion. But I'm listening to everything you're saying. It's very, very true.
That's why I think I like this kind of dialogue we're having here this morning, because I think what we're saying is, look, U.S. markets are up. Euro is, what it is. We're up and down a little bit, but Asia up. Latin America is not up. Give it a look, Let's take a look at some of these as the opportunity. I just heard on the break, I heard Tom doing a commercial for that bank that, is a sponsor. And he talked very glowingly about emerging countries. And, we should not be overlooking that. We have to start looking at these emerging countries again, because that's where a lot of money is going to be made, because we've made a lot of money here on this side of the fence in the United States, and I just, I wonder how far it can go. Just, what the valuations are going to be based on. Sure, not going to be based on interest rates.
Yeah, and on that note, again, expounding on what you just said, I mean, L.A. has now announced that they're going to raise the minimum wage by 2020 to 15, just like San Francisco and Seattle. The Walmarts of the world are suffering already from kind of making some changes they've made. I mean, like some of the things in the U.S. are getting regulatory heavy. And one of the things that I always think about when I'm over here is, you can get stuff done relatively quick. And I think some regulation is good, don't get me wrong. But, things happen quicker when there's not a big, massive pile of red tape that you got to get through. And the U.S. is starting to, with I hate to say it, with, the Democrats and, some of the things that are going on, they've been, mainly one person, it's become a lot less business friendly, if you will. And that affects, growth and capital explosions that may have happened without some of that in place. So
I agree.
I hear what you're saying. I mean, there's opportunities other than the U.S. and you got to try to find them, in my opinion.
Well, in the U.S., with the regulation and all those things have just gone out of control completely. It's very difficult. The drugs things we talked about the other day, the drug field is a good example. The highest paid executive this year is a guy out of Juno Pharmaceuticals. He exercised $88 million worth of options. So, I mean, sometimes you just shake your head, John, and say, what's another billion here, a billion there, another guy makes 88. The average person is out there trying to get by. Traders, it's not an easy game, trading. And I think we're giving them a little overview here. Thanks, John.
Great, Eric.
Talk to you later.
Great. Yeah, it's been great having you on today. Thanks for coming on, and we'll be right back, folks.
Thank you.
You're welcome.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We had Eric Courtney on earlier for most of the show actually, and it's the book of knowledge, I like to call him. And you know, if you don't think you can learn something from talking to folks who have been there, I think you're wrong. Eric has definitely been around the block, and he's he's a mentor of mine, and I respect him so much. And you know, some of the topics that we're going to talk about over the next year or two, hopefully with him, are they're always invaluable to me after, you know, kind of listening and speaking and reflecting on what was said. On a macro scale, I mean, you know, from an intraday trading level, obviously a lot of these broad concepts are leave something to be desired. But you know, continuing to talk about the red line crossing the green line and little technical innuendos, it's good to take a break from those every once in a while, in my opinion. And it's great to get some perspective, stepping back and looking at things from a 30,000-foot view. And I'm a huge fan of some of the things that he said, especially about Latin America. I mean, Asia is getting a little played out. There's going to be kind of a shift in focus at some point. And I don't think Asia's going to hell in a handbasket here, but Latin America, you know, that may be where some of the political scenes get cleaned up a little bit more, like he's talking about in Cuba and a couple of other countries down there. And it may be a new mad rush to build it out. And unfortunately, that's, you know, I hate to see places get built out sometimes because it kind of ruins the serenity of the whole scene. But, you know, that's the way capitalism works. And that's, you know, economies expand, they grow. and people make money, and that's just the way it works. Let's take a look at the S&Ps real quick here. We got about 2 minutes before we end the show. This is something, again, we started out the show talking about this, had a massive run up yesterday, stopped a couple of trades out that I was into personally. Some of our automated systems got clipped, and our breadth situation is still relatively negative even after this run up. So I'm looking at this a little jaded on still buying anything when it comes to the S&Ps on the long term or intermediate term level. On the short term level, let's take a look at the 240s. This is the inflection points to pay attention to. Got a new box on the 240s. We're hanging around unfair highs. Inflection points on the short term, 2108 down below 2099.60. Let's just call it 2100. I'd still like to see this thing get below 2100, kind of put back on the short cap, and then we'll take a look at this again. But right now, it's a little scary up here. We could go higher. Things on their highs go higher. Just could, remember that. And you want some confirmations if you're going to step in. All right, we got about 1 minute left here. Let's go back let's just take a look at crude oil. Getting right at 61. Major inflection points is 60.50. We crossed the border. We come back and retested. Crude oil's in a little bit of a launching pad scenario. The good news is longs now can put stops below 60.50. Still looking at this with targets above at 62.28 on July crude. Let me pull that back up here really quick. Yes, July crude. All right, let's take a look at gold. Gold's kind of been all over the place. And we talked about this, didn't have a lot of direction here, still on a long-term and intermediate-term basis. Still, in my opinion, not a lot of direction. You got some buy points around 1170.5 and another inflection point up top at 1196. These are daily inflection points. I think those are to be bought down below and sold above if you've got to and want to trade some of the ranges on gold. So, guys, you've been great. Thank you, Eric, for coming on today. It was very enjoyable to me. I hope you guys enjoyed that, and we will pick it back up again tomorrow. Stay tuned. TFNN is back with great hosts.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.